What's going on, Juco?
We're back for PM session. We have FOMC coming up. We still have our executions up from this morning too as well. Even though things did not pan out how we wanted them in AM session, right? Like obviously we should have been smart enough to be able to take the shorts right at the 15-minute fair value gap. The minute that it hit it and started pulling back, we should have entered in for shorts there. Obviously, we was looking for longs above midnight open. I don't know how we missed that, but we still could have taken TP right there at 50% of the 15-minute fair value gap on ES. So we still walked away with some profits, but it just wasn't what we were looking for with this move here. So obviously that was a manipulation of what we got, of what we were trying to get, but it's all good. It's all good. So hopefully we get some good things with Kevin Wash today on FMOC. Hold up. There we go. Yeah. So hopefully we get some good things from Kevin Wash today that gives us bullish momentum to be able to take us to possibly midnight open, or do we just continue on with uh trending more to the downside? Obviously, we're hanging around where we swept previous day low here and caught that rally there on previous day low. I wish I would have been, we had stepped away from that point of the market. So once it swept previous day low, obviously we see the continuation, but now everything that move done retraced itself all the way back. And it's just hanging around previous day low now. So What's going to be next? I have no idea. So we're just going to be patient too, as well. It did not sweep. Also, we still have liquidity that's resting above midnight open that we did not take yet. So because we haven't taken that liquidity above midnight open, I'm still looking for that to be taken. I don't know if that's taken in this session or what, but I'm still looking for that to be taken. So give me a second, chat. I want to take a look at something real quick. Give me 1 second. Take a look at something real quick. Really? Did it not save on today? That's interesting. That's interesting. All right, so I want to take a look at. Mm, I want to pull something up real quick. Let's pull something up real quick, and what that is going to be is this here. I'm not so sure how this is going to pan itself out. I don't think that we're going to be
Imagine being
able to take anything here.
imagine being able to build anything just by thinking about it. Meet Base 44, a complete AI creation platform made for anyone with an idea and a drive to bring it to life. Describe what you want and watch it take shape.
I also want to take a look at gold too as well. Maybe perhaps we get a run on Bitcoin too as well. I'm not so sure how that will play itself out, but we're going to take a look at that too as well. So I'm still trying to look up something real quick before we go live. So now the question is, do we get rate cuts on today? I don't think so. I don't think so. I'm not so sure that we get that on today. I mean, I'm still hanging my hats on just being neutral in a sense. Being neutral, very neutral in a sense. But uh, it remains to be seen. So I was trying to find something to pull up for you all, but I can't find it right now. So it's all good. So what we're gonna take a look at, let's take a look at Bitcoin. For my crypto users, a lot of people are talking about Bitcoin is possibly going to run. But look at this move already on Bitcoin. Bitcoin already done had a bullish move since 11 o'clock, 10:30 this morning. Nice move to the upside there. But if you look at the overall with Bitcoin in that parallel channel that Bitcoin is in, here we can move up to the daily to be able to see that. So you can see Bitcoin. Uh, let's go to the charts so that you will be able to see. Sorry. No, you all don't want to see my beautiful face, but it's all good. So let's just take a look here at Bitcoin to see. Oh my goodness. I hate when all this extra starts. To see what it is that we get here. Like, why are you here? Okay. Put this to right about there. And this is what I see with Bitcoin so far. Obviously, it's looking like we're in this bear flag here, and it's creating higher highs and higher lows on this bear flag here. So if we was to take this, keep this, right? And we go to the 1 hour, you can see this parallel channel of what we're in, creating higher highs and higher lows. So if we want to clean this up a little bit, we could start it there. And so here we are with Bitcoin. So you have these series of lows here. You have equal lows here. You have lows here. You have lows here. And people are projecting that, hey, Bitcoin pumps up and comes back to retest this level here, what we know and what we see as resistance on Bitcoin. So obviously it did have a bullish move at around 11 o'clock this morning, which could be a good sign, right, for Bitcoin. But overall, I am still bearish on Bitcoin. Look at ES. Having a little bit of lunch here while we're waiting. But you see the move that is happening on ES? Let's drop down to a lower time frame, like the 5 minute. Would you look at there? Let's get rid of these. I don't know why they're here on the chart. Man, you talking about missing that entry on this morning, or just not even the entry? Okay, we could have had an entry there at that 15 minute for continuation on down to the downside. That was one setup. The second setup should have been us clearly taking profits at 50% of the 15-minute fair value gap. Those two mistakes there are going to hunt me on today. because of the opportunity that presented itself. And that's what I mean and what I'm talking about when I say that, hey, you have to be able to journal. Like when I go back and look at this, I'm going to replay this, paying attention to exactly what happened and what took place during that time of the day. I have to. Now, if we do have continuance to the downside, obviously we broke below previous day low. Maybe let's go a little bit higher. I'm honestly not so sure that we just continue on down. I really feel as though we could push back to midnight open and sweep this level of liquidity that's here right above midnight open. Those equal highs that are there. I mean, that's where I find bullishness. And I don't know if that's just me, in a wishful state in a wishful state right now currently. I have no idea. But I mean, that's just what it is. That's what it is for me personally. Personally for me. So let's just wait and see how this thing plays itself out. Let's see how this goes. So in the meantime, in between time, what we're gonna do is we're streaming live on YouTube right now. So those of you who are wanting to trade FOMC with us, we're live on YouTube right now. Come join us. All right, so sorry guys, had to do that for TikTok. Hold on, let me get this together here. All right. So, what's y'all? I mean, how did the trades go for you all on today? For me, I got wicked out of both of my positions. Obviously, we did secure a little bit of profits on our second trade. We got wicked out of our first trade. Obviously, we wanted to take that bad boy at the sweep of previous day low, but it's all good. But how did trading go for you on today? I hope everything was what you totally anticipated, what you planned. All right, so let's get this post out. All right, so we got that out. So as we wait, right, we're gonna take a look at the charts. As we wait, we have a little bit of bullishness is what's happening here. Obviously, it may be some more continuation on down to the downside. We don't know as of yet, but as we sit here and wait while I eat on some lunch, um, we'll just keep our eyes on peeled on the markets and what it is of what's happening and what's taking place. Do you all have an initial bias as to what you are looking to see during this time? What are you expecting from Kevin Walsh? Because I already told you, like I have my eyes focused on Bitcoin first and foremost, right? We have our eyes focused on Bitcoin. We're gonna go to Bitcoin here and just see what we're looking at on Bitcoin. Obviously, you want to take this to a higher time frame, right? Of where we are because we are within this channel, but you can see the bullishness from Bitcoin right now. And when you look at it, I mean, it remains to be seen. Can it get back and crack above 66K? I think so with Bitcoin. So we see where Bitcoin is. Got a lot of bullish momentum here. I think we come back to retest this high, these equal highs that is right up here at about 67. Maybe we crack a little bit above 68,000 on Bitcoin. But while we're looking at that, let's also take a look at gold. We see gold too as well with a nice move. Here we can take gold to about the 4 hours so you can be able to see what I was looking at with gold. Here we could take this down. And I was feeling the same way when it came to silver too as well. I was telling everybody that hey, silver is in a position of where you should have been buying silver. Look at this. Look at that sweep at right at 60 at the 618 at 64.75. Like you could have been buying here at 61, and if it breaks above the 50% level, like silver is extreme looking bullish to me. Look at that. Look at silver. Silver is looking bullish to me. So let's take a look at YM. Look at that. This has been YM today. MNQ looks filthy. You can pretty much say the same for MES. So we're touching this 5 minute fair value gap on ES right now. Getting a little bit of a reaction off of that. So let's just see how this thing plays itself out, right? Getting that reaction off of this here. So nothing hasn't happened as of yet, man. I'm still sitting here waiting to see if anything happens and take place uh during this time frame. Nothing hasn't happened as of yet. It is now 1:30, so let's just do this. Let's do this. And I'm pretty sure they probably going to wait to the last minute in order to be able to do it. Because usually that's how that happens, right? Sort of wait around the last minute before they open up that press conference, but the press conference is not open as of yet, so we're still waiting a little bit for that. But I want to hear what Kevin Walsh has to say today. Like, I am really interested in that. I'm really interested in what it is of what he wants most. I kind of don't have an idea as to what it is that people are overall wanting from Kevin Walsh. I know myself, I just want him to be able to come in and help give us that momentum that's needed as far as within uh crypto, and also what's, with the things it is that he's bullish on. you know can he come in and do a better job than what Jerome Powell did? But what we can say is that Jerome Powell has been, you know very strategic with how he moved in his last few. I think he did get to the point of where he just did not give a F. But overall, I still believe that he is going to um give us something that's a little bit different than what others have been putting out there. So the expectations of Kevin Walsh and his idea on doing things and what he see, it remains to be seen, man. Like, I'm really truly looking at crypto and hoping that crypto, it gives us something. But then again, I'm hoping that the markets just don't start just tanking. Uh today. I'm hoping that the markets don't start tanking. I'm hoping that the markets don't start tanking during this time frame. So it remains to be seen, man. We're just sitting here waiting. We've got about 25 minutes before they open up. I'm still going to enjoy my lunch. But I do want to hear I do want to hear a little bit of Kevin Wash interview.
As it should be. Kevin Warsh on Uncommon Knowledge now. Welcome to Uncommon Knowledge. I'm Peter Robinson. A native of upstate New York, Kevin Warsh earned his undergraduate degree at Stanford and his law degree at Harvard. Mr. Warsh spent the early years of his career on Wall Street and in Washington. In 2006, President George W. Bush appointed him to the Board of Governors of the Federal Reserve, where he served until 2011. Note that Mr. Warsh was on the Fed during the financial crisis of 2008, the worst financial crisis in more than half a century. Mr. Warsh now divides his time between New York, where he works in an investment firm, and Stanford, where he is a fellow here at the Hoover Institution. Kevin, welcome back to Uncommon Knowledge.
It's great to be back. You hid the most important thing, which is the investment firm I happen to work for, the greatest investor in the history of the world, a guy named Stan Druckenmiller, but you were trying to keep that discreet. I appreciate that. No, I just wanted to boast about my friend and partner.
You keep going because I want him to appear on the show sooner or later. We'll start buttering him up right now. All right, Kevin, here's the first question. Created a century and a decade ago, the Federal Reserve is the one institution in the nation charged with maintaining the value of our currency, the dollar. Two quotations. The late legendary investor Charlie Munger, quote, "Destroy the currency and God knows what will happen." Here's the second quotation. This comes from your remarks this past April to an organization of bankers called the Group of 30, and I've plucked from it a few of your descriptions of the Fed today. Institutional drift, failure to satisfy its statutory remit, contributed to an explosion of federal spending, outsized role, and underperformance. Kevin Warsh, you are attacking a sacred institution, the institution on which every one of us depends every single day for the integrity of the money we make and the money we spend. What do you think you're doing?
In central banking, we are taught to keep our criticisms quite closeted. So I didn't do a very good job of that. In those same remarks, Peter, I described this as a love letter more than a cold critique. You might not have taken it as the love letter. I'm not sure the current incumbents did.
I let the lovey-dovey stuff drop.
It's a love letter because the institution's as important as your setup would suggest. It's a love letter because if the institution can reform itself, then there can be great things for the institution and the country. But it does mean that it's time to get things back on track. I should say one other thing. This is our third experiment at a central bank in the United States, and it's our third experiment not because the first two went so well. They went poorly. Right. This isn't like winning a third Super Bowl, Peter, where the more you get, the better. And the first two failed because they lost the consent of the governed. They lost their ability to deliver on what they promised. And this isn't a history lesson, but you can think about the Jacksonians of prior times, say that central bank seems like they're trying to focus and they're all preoccupied with those special interests on the East Coast, and they've lost track of what's happening to us in the center of the country. It's a version of what worries me today. And so this central bank's going on more than 100 years. And if they reform themselves, they're going to have another great 100. Absent that, I worry.
All right. So I want to return to your remarks in a moment, but first, take me through. I'm a layman in these matters. You're a skilled central banker and investor. You know this world. I don't. So take me through. I've got a couple of very elementary questions. Give me a moment to set up this question. The Federal Reserve System is established in 1913, possesses the power. This may be something of an oversimplification, but it possesses the power to set interest rates and regulate the money supply in the interest of achieving price stability. Those are big powers. How has it been doing? These are remarks by Milton Friedman, Nobel Prize-winning economist Milton Friedman in 1994. Quote, "There is no institution in the United States that has such a high public standing and such a poor record of performance. The Federal Reserve began operations in 1914 and presided over a doubling of prices during World War I. It produced a major collapse in 1921. The major villain in the Great Depression was unquestionably the Federal Reserve System. Since that time, it has presided over a doubling of prices since World War II. It financed the inflation of the 1970s. The Federal Reserve System has done far more harm than good, and I have long been in favor of abolishing it." Close quote.
Wow.
Kevin, why do we need the Federal Reserve System?
So
None of this is new to you. Milton Friedman was here at Stanford when you were an undergraduate.
So Milton, I was blessed to be a student of his, and when he came here, he had a huge effect on not just me, but generations of students that followed. I've spent some considerable time in the archives of the Hoover Institution
Let's
looking
hear
at
how
what
he answers
Milton
this
would
question.
say, for example, the Federal Reserve Chairman. There's a beautiful book by our own Jennifer Burns that includes some of that correspondence. But I had them search and give me all the letters that went back and forth between Paul Volcker and Milton Friedman and Alan Greenspan.
Okay, so give us the dates. Volcker is appointed Fed chairman by Jimmy Carter in 78, 77?
In the middle of the Carter administration. I don't have the precise date.
And then Ronald Reagan reappoints him, and he serves until nearly the end of the Reagan administration, correct?
Correct.
And then Alan Greenspan succeeds him and serves until...
He served 17 years until Ben Bernanke shows up
in the middle of the crisis.
in 2006.
2006, preceding the crisis, sorry.
The only reason why I know that is I recall being a junior White House staffer when I found out that not only had Chairman Bernanke, who had come to the White House from the Federal Reserve and was going back to serve the big shoes of Alan Greenspan, but he wanted me to come with him and take his old job as Fed governor. So I remember that. I remember that date.
All right, okay. But to Milton.
And in that correspondence of Milton, the thing that's amazing about him is he was constantly revisiting his priors. He was constantly asking whether the data and conclusions he came to one year were still relevant the next, whether his judgments on the institution were still relevant the next. And in much of the correspondence during the Volcker years and the Greenspan years, he was quite comforted by changes in approach, by new ways of thinking about the economy, by success that would come to be known as the Great Moderation. So I wouldn't say that Milton thought that the Federal Reserve was a terrible institution. He thought they had bad periods and good. I can only speculate what he would say about the great inflation of the last half a dozen years and how he would have foreseen it. He would have warned of it. And in all likelihood, the
He hasn't answered the question yet.
All right, so one more of these elementary questions, and again, Milton Friedman. Milton Friedman was famous for saying, quote, "Inflation is always and everywhere a monetary phenomenon." Now, if inflation is a monetary phenomenon, and the Fed is in charge of the money supply, inflation is always the fault, ultimately, of the Fed. Why don't you describe what Paul Volcker did when Carter appointed Volcker? You'll know this. I'm just grasping at memories here. When Carter appointed Volcker, I believe we were suffering the highest inflation since the Civil War. And by the time Paul Volcker left office, inflation was right down to 2% or thereabouts. Almost 2%. So, okay, so Milton Friedman and the Fed is always responsible?
Yeah, so I believe what Milton and you just channeled, which is inflation is a choice. As you said at the beginning of this setup, inflation and ensuring price stability was granted to the Federal Reserve by the Congress, most recently in a review of its statutes in the 1970s, so that there would be one agency that would be responsible for prices. No more blaming the other guy. We're giving the baton to you, the central bank, go after it and get it. Now, you wouldn't know from recent commentary of the last several years that inflation were a choice. In fact, during the run-up to the great inflation the last 5 or 6 years, what did we hear about the causes of inflation? It was because of Putin in Ukraine.
Yes.
It was because of the pandemic and supply chains. Well, Milton would be outraged to hear that, and in my own subtle way, I was troubled to hear it as well. Those things lead to a change in prices. After all, in market economy, the prices change in Walmart every day. That's how the market economy works. It's not the central bank's role to police those prices. But that's not what inflation is. That's a one-time change in the price level of a widget. Inflation is what happens if that one-time change in the price level becomes self-fulfilling. That is, higher prices beget higher prices. That means inflation ends up finding its way into every kitchen table and every boardroom because you don't know as a decision maker what the price level is going to be. That's not about Putin and the pandemic. That's about the Federal Reserve. That's about the central bank. And I'm afraid in recent years, this is probably because central banks are part of our culture, is we do a little bit of, well, it's not my fault, it's someone else's fault. And I think that's what Milton would be most outraged by in recent times. The central bank can hit any price level that it wants, any inflation level
Like,
that it
if you
wants.
can go back,
We might not like
if you
how
all
they
could
do
go
it,
back and just
but the
listen to
idea
some
that is they
of what
should be
Jerome
blaming
Powell used to
someone
speak
else
on
strikes
each and
me
every
as,
time he went and stood
quite
up, like he always
antithetical
blamed
to good
everything
economic
on
history.
something else.
And
Like, oh, it's the tariffs, it's Trump in
the remainder
this,
of
or
our
is this Trump in
conversation is
that?
probably important
It's
just
about
to
the
repeat.
war, what's happening,
Not
what's
only
going on, us
is
being
inflation a choice,
indecisive within that as a
but a sound
reason as
dollar
to
is
why
also
the
a
Fed
choice,
was
and
stuck
Volcker
within certain
did it.
decisions of what they
Within
made,
living memory,
whether it was
it has
25
been
basis
done.
point
We
cut
suffered
here,
inflation,
50 basis
and then
point
the
cut
Fed
here,
got it back
or
under
just being
control. All right,
neutral,
one
and
more
we
of these
get no
baby
cut.
questions.
Right? It was always blame being placed. So
Still,
I'm
If I
interested in
might,
being
so
able to
they
see
got
how
it back
Kevin
under
deals with
control.
this part
And
moving
then
forward
I
based off of what
suspect
he's
it's a
saying
little
within this
psychobabble
particular
from
interview
an
here.
economist. Then they got complacent about inflation being under control. Somehow, after the period of what we call the Great Moderation, where prices were more or less stable for a period of more than a generation, I think some in my profession thought this was easy. And in fact, that it was under control because we had all gotten so very good at this. We had all gotten perhaps a little complacent with this business, but economics isn't that easy. And it's really because of the most recent crises of 08 and 2020 that I suspect we took our eye off the ball.
You've used this phrase a couple times now. Let's just define it. The Great Moderation is, I'm asking, it begins by the mid-'80s when Volcker and the Fed, backed, let it be said, by Ronald Reagan, when they actually get inflation down into low single digits, and inflation stays right there, and the economy expands with only a couple of quarters of recession for the next quarter of a century until the crisis of 2008. Am I right about that? And is that what you're referring to as the Great Moderation?
That's exactly right. And we don't want to sound as though, boy, every year was perfect and central bankers didn't make any mistakes. But the mistakes were relatively small and manageable. And for viewers, I think, inflation's still this very abstract concept. We want the change in prices to be such that in the economy, such that no one's talking about it. That's how we know we've done our job. And what do we know about the last 5 or 6 years? It's almost anything. It's almost everything anyone will talk about.
Right. Last of my elementary questions here. Gold. President Nixon takes us off the gold standard in 1971. Until then, the dollar was always convertible into a fixed weight of precious metal, for the most part gold, and that constrained the money supply. The journalist and investor James Grant writing just last year, the opposite of the gold standard, what we have in place now, the opposite of the gold standard is really the system in place today in the United States. One might call it the PhD standard. It's the system of discretionary manipulation of interest rates by doctors of economics, close quote. So James Grant suggests, if not gold, some fixed basket of commodities. Milton Friedman said about the same time that of the quotation I gave you where he said he long stood for abolishing the Fed, that the Fed should be replaced with a pre-announced increase in the money supply by a fixed sum that would take place each and every year. So it was totally transparent. Markets, you could plan a decade in advance. And both of those are a way of saying, let's find some objective standards here. Let's find some way of constraining the money supply that the markets can know about in advance and not leave it all to the subjective impulses and the groupthink and the who really understands that econometric latest piece of research that takes place in the Federal Reserve System now. To which Kevin Warsh replies,
there is no status quo ante to return to. I have many of our friends on the right who believe, well, let's just bring the gold standard back. The world has moved on. Might it have been better or worse had we made different choices along the way? But you have to deal with what's right in front of you.
This is why I'm still bullish on gold. This is why I'm still bullish in our precious metals. As you can see,
let's let the machine do
we marked that out on silver on last night. If you would have caught silver at $61, look, you would have been hella in profit right about now.
Of conservatism.
The same thing with gold. Gold is now retracing.
Central bankers past and
did
present
retrace,
to
and
resist
obviously
whims.
it's starting to be a little bit more bullish.
To have clarity
we have
about
some more
the
continuation to the
function
downside,
of central
possibly,
banks to incoming information.
But
and if Milton
it breaks
were
out
with
of
us
this channel,
today, I hesitate to put words
for gold
in the
to be
great
able to
man's
continue to
mouth.
skyrocket.
But I think he
Especially
would
if they're
say
bringing
that there had been
the
too
gold
much scientism, scholasticism, trying to make precise that which we have still imperfect understandings of. Most of us in economics that are, I'd say, better than average, we try to focus to the left of the decimal point, not to the right of the decimal point. Now, if we were better at our craft, if we were smarter, we'd be physicists and mathematicians.
So we have about 9 minutes to go before the Fed decision comes out. We have about 9 more minutes to go before the Fed decision comes out. So we're interested in waiting on that to be able to see how this thing goes.
If we did,
so we'll listen to a little bit more of Kevin Warsh in his interview.
The economy's changing every day.
On
It's
Hoover
incredibly
Institution.
dynamic. And so I hesitate to say we have a perfect.
And then we'll get prepped and get ready for
now we'll move on to recent history, your recent history, and the Fed's recent history. What the financial crisis wrought. You were on the Federal Reserve Board of Governors during the financial crisis of 2008, which led to the worst economic contraction since the Great Depression and unemployment in this country of 10%.
Are you drawing a causal relationship there, Peter? I'm scared where the rest of this is going.
You're just plain bad luck, Kevin. The Fed responded with a number of actions, but perhaps the most dramatic.
What I like is that Kevin is not new to this. You know what I mean?
Liquidity.
He's been here.
Let me give you some sense of the magnitude of the Fed's action. Between the first and second quarter of 2008, the Fed's balance sheet, measure of the supply of reserves in the banking system, the balance sheet doubled in the space of a quarter from $1 trillion to $2 trillion. Now, you've written that you strongly supported that decision. So before we get to the QE 2, 3, 4, and so forth, about what you're deeply, or at least, well, you'll explain yourself in a moment. But first tell me why you supported that dramatic infusion of money into the markets in 2008.
Yeah, so first of all, we keep bringing up this word money. I should say a word about that.
Please.
Milton believed, as you suggest, that monetary policy and inflation is about money. That is heretical in the modern academy. That is not taught in introductory to economics at most of these elite universities. Most came from a different school, not this monetary school, but more of a Keynesian school. And in that Keynesian school, money barely comes up. In fact, if you look at the transcripts of the Federal Reserve, they tape most of the words that we utter inside the Federal Open Market Committee. You're going to have to look a long time until you see that word money. I think money, strangely enough, has something to do with monetary policy. It has been absent from the discussion. I think it's part of the reason why this great inflation came back. because, well, Milton himself, I don't believe, would have held exactly to the model he had in his mind 30 years ago. He would have said money has something to do with it. And in the run-up to the Great Inflation, around the time of the COVID crisis, we saw a surge of money, both money as best we measure it and velocity as best we see it.
So
and
PV equals MQ, I'm trying to remember back.
Order filled. Order filled.
I would have thought that was basic in discussions at the Fed.
It is non-existent in most discussions among modern economists. Now, Milton used to say, this is the last ode to Milton, then we'll turn to current events.
Yes, yes.
Milton, I was a 19 or 20-year-old, and there was a small group of us around a table a little larger than this, and I asked him some question, probably trying to show off that I knew something about something of which I didn't. And he said, Kevin, the only thing we understand in economics is Econ 1. Everything else is made up. And I remember thinking, Peter, maybe the old man's losing it. Maybe he's sort of past his day. The Nobel Prize was given some period before that. I didn't know until the financial crisis of which you now speak that the old man was exactly right. No one predicted it. No one saw it. Because all we really know about economics, we teach in Econ 1, and at least in the Econ 1, before the schools of economic thinking took over at these elite departments, we said that money has something to do with monetary policy, and I still believe that to be true.
By the way, it occurs to me that as we sit here today, it's getting up toward 20 years ago.
So we're 5 minutes away.
So why don't you take just a
from
moment
the Fed's decision?
Just explain what
We
that
just taking a
felt
position.
like. You're on the phone to friends in New York, you're in Washington at the time, on the board of the Fed. How bad was it? What do we need to understand about that crisis?
So I teach on occasion in this business school not far from where we're taping, and for years I would talk about the global financial crisis, and they'd look at me and these students would have some recollection. Now, they weren't exactly in business, but they remember how their parents would have come home, or they remembered watching it on TV. Now, when I talk of the global financial crisis, they had heard of it. And I could have easily been talking about the Great Depression.
Right.
So it was some time ago.
Right.
How it felt to me is, I was 35 years old and I had finally found myself to this august position because of President Bush and Ben Bernanke. And I was in this beautiful office, and for about 6 or 8 months, life was grand. Someone would come in and put wood in the fire. Someone else would, restock this little pitcher of ice water, and I thought things were good. Little did I know that was the calm before the storm. I would say in retrospect, it was scarier than it felt at the time because we were in some ways in the bunker together. While I don't know if Ben Bernanke would at all be comfortable with what I said at the IMF G30 meeting a few weeks ago, he was a heck of a strong, good battle commander. We were all in the bunker together.
All right, so we're about 4 minutes away, 4 minutes away from the Fed's decision.
Get around a table like this and fight about what's happening and why. And he was quite open to heretical ideas.
Oddly enough, it is very interesting to be able to see. The thing is that we did see ourselves with some bullish momentum here.
But in the darkest days
we wanted to get in right there at that
maybe we get a gentleman's
fair value
view
gap
for
it
how
is
we
of what
handled
we
it.
had. Obviously, we had a little bit of slippage to where we didn't get filled
We had some successes
where we wanted to be. So I did come in with a lot more on my position than what I wanted to, so I had to reduce my position down some.
Financial markets were
But
down
as of
60,
right now,
70%
we
in
are
equity
in
prices, and maybe most alarming,
prior to the decision
Treasury
being
market
made.
auctions.
So
The auction for the most
see what
important
happens.
security in the world,
We're 3 minutes
which
away.
is synonymous with the dollar. People weren't showing up in the auctions, at least at the beginning. Bid-ask spreads were wide, and we were worried that the American economic system was at the very cliff.
So if my recollection,
I will say this though. During these times when we had Jerome Powell, did you not love the fact that the way the markets were set up, it was like you already had to kind of be in position in order to be able to take those trades. I think this is why with this move happening the way that it is, now it was probably pretty good for us to go ahead and be able to hop into our positions now. But as of right now, I'm interested in seeing what the Fed do. And around 2:30 when Kevin gets up to speak, what is he going to say Obviously, he didn't answer the questions of what we were looking for him to answer early on. And first and foremost, we need to get our stop loss in place, right? There we go. So he didn't speak too much on anything of what I mean, he didn't answer too much of what it was that we was looking for him to answer, right? From Milton at all, period. He did not stand on business as too much or as to why the Federal Reserve is in place and why do we need them. He ain't really too much answer that question either. But also at the same time, it's cool that he's able to he's doing this in a sense of, if you go back to what he said, I don't want to be able to give off early indicators as to what our decision is going to be prior to how we did things in the past. When you go back to the past and you looked at things, it was kind of easily able to predict whether the Fed was going to cut rates. And we talked about this on AM session that, hey, if you were betting on what the Fed was going to do during the time frame Jerome Powell was in office, it's like you can almost bet your bottom dollar that we already kind of knew which way things were headed, right? You could have you easily heard it on Bloomberg, you easily heard it on CNBC, you easily heard it on all these
Stop
different. Look
field.
at that. Look at that. Wow. So we get wicked out, obviously. The decision then came. Let's see what the decision is. That wasn't a good reaction. That wasn't a good reaction at all. And we're going back to previous day low for some reason. Good thing we had a stop in place, right? Like, if we would have not had our stop in place, that would have been ugly. But let's see. I'm still looking for that relief rally to be able to take it back to midnight open. Obviously, we want to see exactly what that decision was. So they drop easing bias as expected. No descents in to no change in the rates. So they're keeping everything the same as of now. And look at this push to the downside. Man, that is ugly. That is ugly. Oh, wow. It would have been nice to be able to take this. I mean, with those equal highs sitting up there, we should have just full ported shorts, someone said. Nah. But if you look at this and you look at this from the 1 minute, what do you see? Drop down to the 1 minute. What do you see? We'll wait on that relief rally to be able to catch longs. It's all good. We're not going to FOMO in. But what do you see right here? We talked about it early this morning. Here, here, and here. What is that? Can someone tell me what that is? When you see that, what is that? So that was a quick 123 taken out of our hands that quick. Thought the market would have been a little bit bullish on the fact of he did not change anything. He did not change any rates. He did not make any rate cuts at all, period. But the market said, nope, not today. But we do have relative equal highs here. Again, we're not going to FOMO in. We're going to wait for the relief rally and be able to take a V-shaped recovery. To be able to make back what we lost. So that's interesting, right? So let's hear if anything is happening in the response to the Fed's decision. Let's see if we could find that for you all. Obviously, the Federal Reserve isn't live as of yet, but let's see what happened with Bitcoin while we're waiting on this to pull up. If anything taking place on Bitcoin. Look, I'm starting to see M&Q start to push up and catch a little bit of that rally once we entered into that discounted zone. Wow, look at gold. Look at gold. Look at silver. Oh my goodness, the market is just tanked. That is insane. What about Bitcoin? Bitcoin, same exact thing, right? So look at where we are within this channel with Bitcoin, though. Pretty much trying to see that. Okay. Interesting. That's the thing. All of us felt bullish a little bit based off of the moves that we got earlier today, right? The setups for longs were like there, obviously. And then, like always, here we go. Market starts tanking. But I think we may enter our longs here on ES. So.
Order filled.
So we're back in longs on ES. I'll get that chart over to you all so you can be able to see. So we are back in longs on ES. Straighten the chart up for you all. so you could be able to see. I mean, do you not see that push back to the upside though? I mean, buyers are coming back in strong here. Wouldn't it be sweet though to take this back to midnight open? Obviously, breaking that level of liquidity, breaking this zone of where we have liquidity sitting here a little bit above midnight open. That is right here at 76.1225. We've been wanting that all day long. So hopefully we're able to get that. But we're back in here. Like I said, we wasn't going to FOMO into this market at all. Period. On this pullback. Obviously the setup for loans was beautiful and it was there, right? That was my model. That's why I entered into the trade the way I entered into the trade. But I knew that the relief rally was going to be able to come. And so we're going to be looking to take profits here soon just to be out of this market. But we're going to see how this recovery plays itself out. So we're going to drop down to a little bit of a lower time frame, like the 1 minute, to be able to see. I told you all we was looking for the V-shaped recovery pattern here. So let's see how this thing plays itself out. Hopefully we just don't continue to just tank. That would suck. So we don't want to leave anything on the table at all. We don't want to leave anything on the table. So let's focus here. Look at those relative equal lows that are sitting there. That are sitting right here at 75.1375. All right, we're probably going to scale off. Let's see if buyers continue to step back in here.
Order filled.
Get off our position. Go ahead and secure some profits, right? Market is now pulling itself back. So we're just going to allow this runner to run to be able to see if we can be able to fully recover and go back to take out these equal highs of what we have here. Um, Obviously, that's what I'm pretty much trying to hang my hat on here, um, and not be too jumpy, right? So it remains to be seen. This is what we want, right? Like if we could go back to these relative equal highs that are here instead of coming back to these equal lows of what we have here. But obviously, it's looking like we may possibly get stopped out. So let's wait and see. All in all, I like it though. You know, I like it. I don't think the market do in like once he comes and gives his speech, I really don't think anything of that magnitude is going to shift and change. I think the severity of the move of what we got kind of already just now have happened, right? Since the market knows and it already went and priced itself in. Hey, there's not going to be any changes made from what we've been doing already, right? Because if you take a look at what we've been doing already, we already been like just the other day we hit a new all-time high on MNQ. So why can't we, continue to be able to do that same exact thing? Um, if it's not broken, don't try to fix it, right? If it's not broken, don't try to fix it. Just allow it to continue to do what it's doing. And that is why, you know, I'm pretty much bullish in a sense on Kevin Washington and how he's going to approach the markets because I don't see anything of what he's looking to be able to change significantly. I think he's going to come in. He's very pro Trump. He's very pro crypto, and he's just going to make it a little bit harder for us to be able to decide what is going to be his next move. He's going to play chess. He's not going to play checkers. That's why I said for us, it's better that we already go ahead and enter into positions. So because we don't know what's going to come, right? And we allow like if your model shows up, hey, go ahead and enter in if your model shows up. Our model showed up, right? We entered in, and then obviously, if you go back here to what we were seeing, we saw power of three right there, accumulation. We saw the manipulated move going up, and then boom, you got the distribution going down. That was power of three all day long. And so at that point, once I spotted it and saw it when I moved to a higher time frame, it was like, you know what? I'm not even mad. I'm not even pissed off. I'm not going to FOMO into the market. That'll be the last thing that I do is FOMO into the market like a person who don't know how to trade. But being in a position of where I am and understanding how to be able to play the market, it's more of okay, cool. I'm not going to FOMO in. I'll just wait on the relief rally on a V-shaped recovery. Obviously, we could take it back to these equal highs here, and we have resting liquidity above midnight open. So if the market just wants to continue to pump from here and draws back to liquidity above midnight open, then I'm all for that. And that can be all throughout his speech, right? All throughout his speech of him giving even more reason on why he's more bullish with everything. uh well, not why he's more bullish, but while the market should be a little bit more bullish after this pullback here. So, you know, it is what it is. It is what it is. I'm not angry about it at all, period. We're in profits for today. So that's pretty much all that should matter, right? As long as you're in profits for today throughout your trading, then what are you hanging your head for? There's no reason to. So we're good. So let's while we're waiting for this trade to play itself out, right? Like obviously we'll keep our eye on this. Let's go ahead and take a look at how the rest of the market is performing. Let's take a look at MNQ and what is happening and what is going on with MNQ. So we see a little bit of a recovery on MNQ2 as well. Obviously, the market has coupled itself back. We're not decoupled as we were earlier on. It has coupled itself back on indices, and we see that V-shaped recovery coming back into play here. So this was the trade that we wanted, right? Like obviously we didn't FOMO back into we didn't FOMO in when the market started tanking, right? We said we was gonna do what? We was gonna wait on V-shape. So that is kind of what we're getting right here. We want to go back and see if we could fill this gap of what we have that's here. So this is probably where we're going to end up taking profits. Matter of fact, let's go ahead and mark it out. I'm gonna mark it out on ES, and that may be where we go ahead and exit out. Yeah. So what we're looking at, which will probably be our exit area, is 75.72. 75.72 will probably be where we go ahead and just walk away for the rest of the day and walk away in profits on today. I don't want to close prematurely. I really, really don't. So I could exercise a little bit more patience here. But 75.72 may be where we walk away for the day. We'll see. We will see. Yeah, that might be. Um, that might be the one. Just exercise a little bit more patience here. Let's see what's going on with gold. Gold is slightly recovering, pushing itself back. Interesting. What about silver? Silver's still around 69. So silver hasn't really like fully tanked, right? Obviously, we're looking at it on a 1 minute chart. So it's just a slight pullback in silver. I mean, come on. It was sitting at 71 at 71.65 today, right? So it's not too bad. Same thing for Bitcoin at 65,475. That's not bad to me. It's a lot of selling pressure that's right here, though, that I don't like. A lot of selling pressure that is right there. So we're just being patient, just being patient. Let's go back to NQ. see how this plays itself out. You know, this is our last runner, so it's not really like we are too concerned. All right, we might just close out here.
Order filled.
All right, so that's FMOC today. Obviously, we didn't get the full recovery. I mean, we did get slightly a bit of that, but like we said, sellers were going to come in very heavy during that time frame, and so could be cool with walking away with this for today. Oh, you booger, you, if you start to reverse. Yeah, so we're cool with this for today. We did finish today in profits, and like I said, you know, anytime FMOC comes, right? You either want to already be in position. You don't never you never want to FOMO into the markets, right? Like that is the last thing that you want to do. Anytime you do see moves of significance like this, the last thing you want to do is FOMO in, right? You don't want to FOMO in. And so everything is still cool. We finished the day in profit. So kudos to those of you who did trade with us AM session, and obviously, you know, like I said, we were going to cut risk very slightly uh, when it came to FOMC, right? We don't want to over leverage into things at all, period. You know, so if you could make a couple of hundred there throughout FMOC, that's good. But you never want to put yourself in a position to where you're over leveraging and you take significant losses, right? So we were willing to be able to risk um what we took on our first initial trade, right? Which was what, 192. So we lost 192, but we was able to recover that, right? We took TP on, we took a partial, right, on the reversal, and then price just came back to break even. So we technically did not lose any money today. So that's great risk management. That's great trading, and I'm very appreciative of how we was able to play this. So should we come back at 6 o'clock at market open? Should we come back at 6 o'clock at market open? How do y'all feel about that? 6 o'clock? Because I mean, in my opinion, you know, I think we get that move of what we were looking for probably later on. I don't think it's going to come right now. We may get it in Asia, right? We may get it Asia session, or we may just end up not getting it at Asia at all, and we accumulate during Asia and we catch it on when? London. So I don't know. I'm really hoping, you know, that we get that sweep, man. I don't know how long I could just sit here and just go without us getting that sweep because it's just been so primed for us to be able to take that. Like, how does that not play into our hands today? Or how did that not play into our hands? That should have played into our hands. I mean, let's just go back real quick before we end this. I just want to go back real quick just to show, even this morning, right? Even this morning, if you go back and look at the setup from this morning, hold on, I'm gonna pull it up for us. Y'all, I don't know why the market's looking like it's want to play with me today, but the minute that I hop back on, it's like, psh. Okay, so here, let's just take a look at this real quick one more time because I have to go back. I'm gonna have to assess this day, you know. Uh-oh. Y'all, I might re-enter. But wouldn't that be FOMO? Wouldn't that be FOMO, right? Should we just walk away with the risk management of what we've done on today? Should we just walk away? So look, this is what I was talking about.
And genuine interest in moving the Fed forward.
We could just go ahead and
This week's FOMC meeting exemplified the very best of the Fed's traditions: rigorous debate, open-mindedness, commitment to mission, responsibility, and accountability for performance. In this business, they all add up to one thing: getting monetary policy right, or as near to it as we can do. That is our North Star. My colleagues and I are here to serve our legislative remit, which you've heard us say before: price stability and maximum employment. And these objectives guided our business in the meeting just concluded.
Right now?
As you saw a few moments ago, the committee decided to maintain the target range for the Fed funds rate at 3.5% to 3.75% in support of the Fed's dual mandate. The committee also reaffirmed its policy of maintaining ample reserves in the banking system.
Order filled.
Economic activity is expanding at a solid pace, despite elevated uncertainty that owes in part to the conflict in the Middle East.
We're back in.
Productivity growth and capital investment, both strong. Job gains have kept pace with the workforce, and the unemployment rate has changed little. We recognize that inflation has been running well ahead of the Fed's long-stated inflation goal of 2%. That's been going on for more than 5 years. Persistently high prices are a burden for the American people. But the recent past need not be prologue. I am pleased to report that members of the FOMC are unambiguous and unanimous. This committee will deliver price stability. At any institution, a change in leadership is a natural and timely opportunity to reaffirm its mission, to review current practices, and to consider whether those practices best meet our objectives. My Fed colleagues and I will be working in close collaboration to ask what changes might improve the conduct of monetary policy. On that score, you might have already noticed something. a difference
or
in
a matter
today's
of
policy
proving
statement.
yourself at this point?
It's a bit shorter,
That's where
a
we're
bit
sitting
simpler,
at with them right
and it dispenses with some older language. That statement just gives you the facts as best we can judge it. Absent also is so-called forward guidance, which we agreed was not well suited to the current policy conjuncture. This afternoon, you also received the usual summary of economic projections. It's been the practice of this committee for participants to submit these projections, and I have encouraged my colleagues to continue to do so. I, however, have refrained from offering any projections of my own consistent with my long-held views on the SEP, at least as currently structured. In the median projections, real GDP rises at 2.2% this year, 2.3% next year, and total PC inflation runs at 3.6% this year, 2.3% next year. The unemployment rate stands at about 4.3%. The median participant judges that the appropriate federal funds rate to be at 3.8% at the end of this year and 3.6% at the end of next. Let me turn now to a few words on a key initiative that we're announcing today. I'm appointing a task force in each of 5 areas that are central to the broad conduct of monetary policy. First, Fed communications. Second, the Fed's balance sheet. Third, our use and reliance on existing data sources. Fourth, productivity and jobs in an era of transformation. And last, the Fed's inflation frameworks. These subjects are timely, consequential, and in my view, worthy of a fresh look. My colleagues and I discussed them with energy and purpose over the last couple of days. For each of these independent task forces, I'm enlisting some of the very best minds, both inside and outside the economics profession. They will be supported by subject matter specialists from our superb Fed staff. And they'll have a straightforward charge. Start with first principles. Ask hard questions. Examine current practice. Consider alternatives. And ultimately, propose next steps for policymaker consideration. Since last summer, my colleagues discussed possible improvements in the form and function of Fed communications. This new task force will build on that effort, and I expect propose some well-considered changes, including to the SEP I mentioned a few moments ago. The second task force, the one on balance sheet policy, will review the benefits and risks of the current ample reserves regime and the composition of the Fed's balance sheet. They will assess alternative frameworks for the conduct and operation of monetary policy. The third task force, the one on data, will evaluate new information sources and consider methodological changes to improve data gathering, with the aim of giving policymakers more accurate, relevant, contemporaneous, and perhaps most important, actionable information on the state of our economy. Fourth, the task force on productivity and jobs. It'll survey the pace, the reach, the economic impact of new general purpose technologies, including AI, and explore the implications for the Fed in pursuit of our employment and inflation mandates. The last task force, the one on inflation frameworks, that'll examine the drivers of inflation, first principles, and weigh the full range of ideas for delivering price stability in a changing economy. You'll hear quite a bit more about these task forces and this overall initiative in the coming weeks. Enough for now to make a simple statement. Each task force will serve an objective shared by everyone in the system, shared by everyone around that table that I sat with over the last couple of days. A Federal Reserve that is clear-eyed about its mission, fit for purpose, and focused on the future. And with that, I appreciate your attention. I'm happy to take your questions.
Hi, Chairman Howard Schneider with Reuters. Good to see you again, and welcome back. This is a lot to be putting in motion so fast. What is the timeline you have in mind for each of these?
So I think it'll depend on the task force. It also depends on the urgency in which we need clear answers. My expectation, I'm still in the business of recruiting and finalizing them. My expectation is the task forces will begin work in the next couple of weeks, and we'll start to get some more information from them, some more framing of how they see things starting in the fall end, hopefully most, if not all of them, concluding by year end.
And just specifically on the
Beautiful
inflation
move
framework
of what we have
you talk about
here.
first principles. Does this include a review of the 2% target itself? You've mentioned that things to the right of the decimal point don't matter. Should this be starting from a premise that 2% as a point estimate is too strict?
Let me break that into two pieces. First, on the inflation framework review, their remit is what are the drivers of inflation? What's the Fed's responsibility for inflation? In part, how do we measure inflation? But that'll
we scaled
overlap
off
with
our
my
position
data group.
just a little bit.
On the 2% inflation objective, that is the Federal Reserve's long-held objective of 2%. You've heard me say before, I tend to focus on the left of the decimal point. Well, the 2 is the left of the decimal point. For now, 0 is to the right. I see no reason until we...
What if employer-sponsored insurance didn't have to be group insurance? Group health plans often come with rising costs and plan options that don't fit everyone's needs. Now, a new form of employer coverage called an ICHRA can help. ICHRAs make costs predictable with stable pre-tax contributions, and they make plans personal because employees can buy any plan from any carrier. So plan on...
The bulk of your colleagues expect core PCE to run around 3.3% by year end, and for the 2% inflation target not to be reached until 2028. So I'm curious how patient you think the Fed can afford to be at this juncture in terms of waiting for one-time inflation waves to...
We just scaled off one of our positions, so...
wash through.
Sure. So quite a bit there. Let me try to break that into pieces. First, we have the capability and commitment to deliver on our price stability objective of 2%.
Yeah,
that's exactly
so
what we're going to do.
I don't call it
in the Fed's review of its strategy over the last number of years in January, the Fed, including the strategy that we're still bound by. The Fed statement says that inflation is primarily determined by monetary policy.
If the model's there, if the model presents itself,
I've said for years inflation is a choice.
We took
you
the
bet it
opportunity
is.
again when
and
we were
today I'm
literally
announcing
about
that
to
this
log
committee unambiguously and unanimously have decided we are going to deliver on that. The rest of your questions sounded like an encouragement for me to give forward guidance. We've dropped forward guidance. Some along the committee, I think, dropped it, I suspect, from our discussion the last couple of days, because they said at this moment in time, it doesn't feel as though providing forward guidance is right. Others have, I'd say, different views and think as a general proposition, forward guidance isn't the business we should be in. But that'll be taken up by the Task Force on Communications and my policymaker colleagues. We're going to listen hard to what the experts say and make our own decision. But I can't give any forward guidance about what we're going to do next. The good news is we'll be meeting in 6 weeks.
So just following up, I guess, on the current policy settings, then I am curious how restrictive you think things are at the current moment,
still in our
given
position.
the flow of data that we've seen and forecasts that are coming down the pipeline.
Yeah, I've heard characterizations both inside and the Fed about that.
I told
I'll
you
give
he's
you
going
my
to
own.
leave you with an indecision.
It's uneven.
He's not
If I
going to
look at the housing markets as one example,
and give any indicators
Fed
as far as what's
policy
going to happen
isn't
moving
the single determinant of the state of the housing market, but broadly I would say there, Fed policy appears to be somewhat restrictive. I would have a hard time managing to say those words if I were to see what's happening in financial markets. So I'd say it's
beautiful
uneven.
Move to the
That's
upside.
perhaps a
I am
function
loving
of
this
different
trade,
transmission mechanisms of monetary policy.
I'm loving it. I'm
whether
loving the
monetary
fact that we were
policy
able to
is
take
coming
some
from our
profits off the
interest rate
table.
tool or a balance sheet
We still
tool.
have a runner out
The
there
good news,
being
we have a
able
task
to
force
run.
on that too,
So
and the balance sheet
I'm
task
loving
force will be
this.
looking more at that
I'm
subject.
loving this.
You've said you don't like forward
loving
guidance.
this.
You
I'm gonna
dropped
remove
it
that
from
stop there,
the
though.
statement this time, but with the dot plot, 9 members suggested that they want a
This
rate
is what I'm
increase
talking about.
by the end of the year.
This
and
is how
the
you
markets have taken that
when you
as
see
forward
it,
guidance.
you
So
just
what
have to
does
go
this
and
mean
take
in
it,
terms of
right? We
how
literally
you
saw it, and
guide
what
the
did we do?
markets and
We was
in
about to
terms
walk
of,
away, and then I was like, no, Jeremy,
what
don't
the
walk
dot
away.
plot's
What are you doing?
future is.
Wait just another second.
I'm going to have to give you the
and
same answer I
re-enter.
gave
It
to-
felt like
to
it would have
Ms.
been
Smith.
FOMO
We've
on
got a
that
task
behalf, but
force
it's
for
like
that.
when your model
I'll
presents
give
itself,
you a little bit more.
have to take advantage each and every
I
time.
reviewed the dot plots, and when I saw the submissions, I noted that all the submissions were coming in with pencils. You know, those kind with the big
just
erasers.
have to hang in there. There's no reason to
That's
walk
to
away
say
like that.
I think my colleagues around the table,
But I
when they
said, we're gonna
submitted
go
their
back and
dots,
review this day
understand the world is changing
overall,
quite quickly.
and everything
And
of
they
what
didn't feel
happened
bound by them
throughout
6
this day.
weeks from now or 6
But
days
like I
from
said,
now.
we're
and
going
if
to
in the
draw
event
on
that
that
their
liquidity that's
circumstances
there,
change.
and I'm going to hold
I'll
on
note
to
a
this
couple
trade
other
until
things.
we
What I
get
heard
there.
around the table
But like I said,
was as they submitted
you
their
get
modal
into
forecasts, their modal forecasts, to be clear, weren't
a point
this
where
was more likely than not. This was more
psychologically,
likely than their
you know,
other scenarios. So I did
you start to
hear,
feel some type of way because
tons of
things
conviction.
don't
What I
pan
heard
out
was the
specifically
kind
of
of
how you
humility
want it,
that
right?
I think we should have.
A lot did not plan out
I
on
did
how we
not
wanted it in
submit
AM
a
session.
dot. For me, it's not helpful in the conduct
But we
of
was
policy.
okay with what happened, right?
I suspect by year end, as I mentioned in my opening statements, there'll be a review about
we were able to see
communications
exactly
broadly. Press
happened.
conferences, dots,
And what did we do?
Meetings and the like.
We left ourselves
transcripts, minutes.
An
This will be part of
opportunity in
that.
PM.
I don't want to
So when
prejudge
PM
the
comes,
outcomes there,
obviously,
but I'm pretty open-minded
right
about what
before
they
the
could
Fed
be.
decision comes out,
And I
we
was
go and we take
just
a position
incredibly
there,
impressed over the last couple
right?
of days. My colleagues over the last 2 days, and
We
frankly,
got caught
over
in
the
a
first 3
manipulated
weeks I've been
move.
here,
But what did we
we've
say?
been
We wasn't
very
going to
open
FOMO in. We're
about
going to wait on a
changes.
V-shape. We waited on a
Changes ain't
V-shape.
easy.
We took
Changes filled
profits
with
there.
risk. But our number one goal is
And
to
price
get
continued
monetary
to pull
policy
itself
right.
back at break even, took us out
The way
of
to
the
get
trade.
monetary policy right is to
Then as
deliver
Kevin
on
Warsh
the
starts to
remit that
speak,
Congress gave us to
he
deliver
started to
on
say
price
some things
stability.
that sounded
And there
very
was no
friendly
disagreement on any of those
to the
points.
market.
At the risk of
And as he started
possibly
speaking
getting
on
the
those
same
things, what
answer
happened?
about task forces,
Our model presented itself
communications.
again. What did we do? We
What
caught
is
a
your
beautiful
feeling
entry,
about these news
and
conferences?
we
Are
were
you
able
going to
take some
continue
partial,
one
and
after
now,
every meeting?
we're sitting in
Do you think find
on
them
this
useful?
rally on this draw to
what is
liquidity
the future for the
above
way
midnight
Kevin
open,
Warsh
and that's
will
where I
communicate?
believe we're headed.
Well, this one's probably got another 15 or 20 minutes
That's
in
the
it,
next
so I don't
draw
want
on
to prejudge
liquidity.
the outcome.
So at this point, it's just a matter of
Press
exercising patience
conferences
until
can be a
market closes.
very useful way to communicate with households, businesses, and more broadly through using the likes of you. I had a great old mentor named George Schultz, and his mantra was press conferences are useful.
Enough of what Kevin is talking about. We're going to now dial in a little bit. Take a look at Bitcoin. Bitcoin has recovered. Silver has recovered. Gold has recovered. The market is now recovering itself, right? It's breathing a little bit. The market is now recovering itself, and you can see so we're just going to exercise just a little bit of patience here. Give the trade some room to breathe. I want this draw here. That's what I want. I've been wanting that all day long. And if we can get it here, That makes my day. See how this plays itself out. Man, y'all don't understand. I was literally about to walk away. I was literally about to walk away. Yeah, I was about to walk away. Still had more money to be able to go and get, right? Some people would have been like, bro, you FOMO'd in. But I would have been like, no, I didn't, because we caught a bullish move and we entered in right there at the fair value gap. So like that's my entry model presented itself. Why not take that opportunity? So, and that's what we did. So that's another W. We just didn't get the 1 to 4 RR on that move, and we could have gotten it earlier today, but we didn't get it earlier today. So everything has been primarily like quick snipe, quick snipe, quick snipe. I wanted the big boy move today, and it just wasn't handed to me. But usually that comes though with FOMC. When we have days that's like this, you know, where news is very heavy, the market is in an indecision. Obviously, it started pulling itself back, and we catch somewhat of a bid. But I mean, everything is now starting to recover though. Look at silver. Silver's back at $70. Look at gold. Gold is starting to recover a little bit. Look at Bitcoin. It cracked 66. Even though it cracked above 66 earlier today, right? But now you got 66K in Bitcoin futures. So the market is slightly recovering. It's just taking its time. Slow pumping, slow grinding. That's why we went on ahead and took partials, and we just allowing this running to run, giving the trade some room to breathe, and we want that draw. I am betting my bottom dollar, man, that we get this draw on liquidity right here. I mean, it makes sense. It's just a matter of like, do we hold on to this trade all for the rest of the day? Away from 3 o'clock. There we go. I like to see moves that's like that. As you all taking a look at what we look like on the 15-minute on this? I haven't taken a look at what we look like on the 15-minute, obviously. Look at that bullish recovery. Look at that recovery there. We come back, enter into this fair value gap on the 15-minute. Like, that's what's happening, right? We're entering in on that 15-minute on that fair value gap. So we want to see how it reacts to that. So we're just seeing how it reacts to that. Obviously, I'm liking it. I wouldn't mind probably adding a little bit more to our position, because I just don't think it just fails completely. Maybe we get one of those crazy wicks and price reverses. That's where I should have entered in. I said that. Oh gosh. I should have added to my positions right there at 75.60. Did not add. That pisses me off. All right, so should we take our runner and run away? Or do we continue to hang in there? Right.
Order filled.
We'll just take that and be cool. So great job on today, man. Oh my goodness. Gosh. Great job on today. Great job on today. I mean, I'm not mad at all, period. I'm not mad at all, period. So now we could actually walk away and be good and be cool with what happened. And that's exactly what we're going to do. So we're going to walk away. We're good with everything of what happened and what took place on today. We will catch you all again tomorrow, same time, 9 a.m. And thank you for trading with me, man. Tomorrow we're going to be going over more. We're going to be diving deeper into our trader education pool on tomorrow. So those of you who are looking to be able to learn how to trade, this is your opportunity to be able to join us on tomorrow so that you can be able to understand exactly what my model is, exactly how I'm able to enter into positions, how I set my stop losses, and how we continuously make money, right? We're not in the business of always losing money, right? We went 2 for 1 today out of 3 trades. We banked on 2 trades and we lost 1. And that was literally the manipulated move prior to the Fed decision. So I'm cool with that. I'll take those odds all day, every day. Look at this move to the downside. That's why we got out. But being able to know when to get out, right? All that. So I look forward to it. I look forward to seeing everybody on tomorrow. Man, appreciate you all's time. Hey, and remember this. It's only going to get better from here, man. We made today, we did around 1,400 on today. We 192, we lost 192, we recovered. Here, let's pull it up. $13.92 on today. $13.92 on the day. So I'm not mad at it. I'm cool. I could take that and just walk away on FOMC. So it is what it is, right? It is is what it is. So I appreciate you all, man. I appreciate each and every one of you for being here with me. And we out.
What's going on, Juco?